What's up, guys? Crypto Savvy here. Could there be proof that the bottom's in? Well, if you look around the internet, everybody says they have proof that the bottom's not in, that we're going down to 2,500, 1,800, 1,300, 1,200, 800. I've seen it go as low as 700. But I'm going to take a different look at it today, and we're going to check out the charts first and look at the current price. And then towards the end of the video, I'm going to show you a couple things I have found that could possibly show proof that we have hit bottom. And obviously, there's no guarantees, and nobody really knows where the bottom is. But I am going to give us a couple points that could show that the bottom is in. Stick around.
1, 2, 3, go!
Hey guys, as always, I want to start out by saying I'm not a financial advisor. This is not financial advice. This is my opinion and my view of the market only. Anybody doing any investing or any trading in this market, I suggest you do your own due diligence and your own research, as this market can be extremely volatile and extremely risky. With that being said, let's get into the charts. This is the daily Bitcoin on Coinbase, and still looking at this falling wedge here. And what we've been watching is this symmetrical triangle. Zoom in real quick, get a good look. All right, so as you can see, the symmetrical triangle, this top solid line and this bottom dotted line is our symmetrical triangle. And I'm gonna do a quick like Elliott wave count in this triangle, because I do in some cases use Elliott wave, but I think Elliott wave theory is really only good in hindsight. If you watch the guys doing Elliott wave, they'll post a chart one day with a count, next day the count's different, next day the count's different, and that's because Elliott wave is so subject to change. You can't really rely on it to, you know, forecast where you're going. It does work sometimes, but for the most part, Elliott wave has its place, but I think its place is mostly in hindsight. But anyways, with that being said, let's do the count on here, and this would be A, B, C, D, and E. And most of the time after E, it'll break up, or, you know, it'll break in the opposite direction of where E hit. But also keep in mind, this could be a continuation pattern from the downtrend. And if that is the case, we've done measured moves before. I'm not going to go through all that at this moment, but then we'd be looking down. If we did break down over here, we'd be looking right around the $2,500 range, which would be the bottom of this wedge again. That's very possible, but I am still steering towards the bullish side, and I've been on the bullish side for quite a while, and I've gotten lots of people, you know, saying I shouldn't be so bullish or whatnot. Well, I go by what the charts are telling me, and I don't use, you know, 50 different indicators that, you know, keep going. One will say it's going one way, one will say it's going the other. I keep my charting extremely simple. The less you use, obviously, the less confusing it is. And you get better if you only use certain ones, and, you know, find the ones that work for you, stick with them, and learn them as good as possible. And it just makes it easier. But anyway, obviously, as I was saying, we could, you know, break up after E here or break after down, but these are lines we want to watch, guys. Another scenario is, like I said, if you watched my video yesterday, let me get this out of here. I see us getting back up and testing the top of this resistance line again, around between the 38 and 3,900 range, and I do believe we are headed up towards there within the next couple days, anyways, if not today. But let's take a look at, if we were to come up here, and if we were, there is a possibility we come up, test it, get rejected, come back down, test it again, and break through. That is a definite possibility. And if we do the measured move on it, let's go from right here, the longest point of the triangle, and come over. If we were to break out here, you know, it's possible that we continue up and through this top resistance line. And as you see, if we were to break up, that would be right in line with our 200 EMA, which, you know, would make sense if we were to break up. Like, you know, I'm not saying we're going to break up past this, but I do think we're going to at least test this line between 38 and 3900. But if we were to come back down, like I showed you before, and break down over here, you know, we could be going as low. I have this target down here as, you know, the 2200, 2100 area, which, again, it is possible, but I am not looking that direction unless we break this bottom trend line. Let's zoom into a little bit closer. Let's go into the 4 hour now and look at what we're looking at here. As you can see, I have a triangle drawn up there from our run yesterday. And I also have these down here, and these are down targets if we are to break down from here. Let's go into the 15-minute. Give us a better look at it. I think, yeah, this will work. Okay, so here's the triangle I have drawn in here, and obviously this is the resistance and this is our support. If we were to break through the resistance here, I'm going to do a measured move off of that. Go off the bull flag here. Measure the bull flag, and then you put it on, say, if we broke out, you know, somewhere in this area. Excuse me. And that would bring us up, according to that, the 3950 area or whatever. But I'm being kind of conservative. If we were to break out there, my mid-range target's about 3850. So anywhere from the 3800 to the 3925 area would be a good range, and that would, you know, again, test the top of this upper resistance line on the symmetrical triangle. And like I said, if we were to break up above that and then find support, you know, we could go much higher. But as of right now, that's what I'm looking at. So yeah, if we were to break down from there, I have these two targets here, which is 3525 area, and then this old resistance at 3480. That's if we were to break down, and you know, it could go either way. If you guys are watching the chart, draw these lines in and really keep an eye on them, and that'll help you. Just to be open, I'm actually in a long here. I opened a long last night, a paper long for 35.90. So anyways, yeah, let's get into looking at what I possibly think the bottom could be in. And first of all, I am going to show you this I showed yesterday. And I have another chart after this one, so make sure you stick around. Again, before we start this part, if you haven't already, please hit the subscribe button in the lower right-hand side of the screen. Give it a thumbs up. Tick the little bell, and it'll get you notified when I post videos. Also, if you would, leave comments. Let me know what you think, and I'd appreciate it. So, I've drawn these two arcs here, and this obviously is the 2013 bull run. And if you look at this arc where we came down, we had 1, 2, 3, 4 lows, and I marked all the lows. And then this is 2017 bull market, and then same thing. If you look at the lows, 1, 2, 3, 4 lows. And that's not to say we shoot up. Obviously, we could be sideways for, you know, 6 months, even a year. It's right in this range between the, you know, $6,000 and $3,500 or $3,100 range. But then, you know, after that, maybe towards the end of 19, start moving up. But now what I was talking about, which was interesting, is this. I found this on I believe it's Jack Bauer on Twitter. And if you look, this is the gold for, I think it was about 21 years. But then if you look at the Bitcoin under it, you know, the resemblance is amazing. I mean, amazing. And then you see here where at bottom, where we are, you know, now that was our 3120 and to where we are. And if you look, you know, after they had to drop off this triangle, you know, then that ended up being the low. There was one dip and then the big dip, and then here's our dip and then the big dip. Now, I know everybody says you got to have a capitulation. There's always capitulation. There's never enough time at the bottom of the market. It don't let you buy. And, you know, I hear one guy in particular saying that all the time. There has to be capitulation. Nothing matches up if there's not capitulation, blah, blah, blah. Well, what I did, I zoomed in. I'm going to pull the chart up right here. Okay, that's where the bottom was on the gold. And I'm going to pull that up. It was in 99. And we're going to look for a capitulation candle. Here we are. And this is the daily chart. So there should be capitulation candles. If that was, you know, the bottom, and there has to be capitulation. But if you look at it, I don't see any capitulation candles at all. So that just goes to prove there doesn't have to be capitulation candles. No big candle with a big long wick, or, you know, all the crap you're hearing on the internet. So anyway, there's proof for you that you don't need that capitulation candle. And these two charts obviously are very similar. And human emotion is what guides these charts. So I don't know, you know, everybody make your own opinion on that, but like I've been saying, I'm still going towards the bottom being in. So all right, guys, I hope you liked the video, and if you haven't already, like I said, hit the subscribe Crypto Savvy logo over my head. That'll get you subscribed. Tick the little bell to get notified when I post new videos, and please give it a thumbs up and leave comments. Let me know what you think. Thanks, guys.